All right, the NIL money is now a $1.6 billion opportunity for those athletes who are making that money. Okay, and here in Texas, it's massive. You've got UT, U of H, Texas A&M, and now high school students can now have the opportunity to make future NIL money that they can access. And in this video, I'm gonna go over how, as an athlete, or a parent as an athlete, or a realtor working with athletes, that they can use this money to completely set themselves up financially through investing in real estate. But first, okay, so a couple things to go over. Number one is I'm not a CPA, not a tax person, right? I'm a mortgage guy. So everything I'm gonna go over is strictly based on setting you up to be in the best position possible for you to be able to get a mortgage, to buy a primary home, a rental property, all of those things, okay? And the number one thing to start off with is get a DBA or an LLC set up immediately. Even if you are in high school and you know eventually that money is coming and where your career is going, set it up in advance. The reason why is many times, many mortgage options are gonna wanna see that you've owned the business or been self-employed, making NIL money, right? Because you're now a business. And that's something to really think about as a young person and an athlete. You're a business, right? And they wanna see that that business has been around for 2 years. Many times. There's some options that you can be doing it for less than 2 years, but get that started right away because it's gonna help you in the future. The next thing to keep in mind is how you're handling your money, right? Have all of the money that you're making, all that NIL money from the university, from advertisers, from appearances, from all of that, have it go into one bank account, not multiple bank accounts, and make sure just the athlete is on that bank account. So you don't want to say some money went into my parents' account, then I opened my own, some went into my business account, some went into my personal. Set up one account that strictly is for all of these deposits. Again, because certain mortgage options, such as bank statement loans, are gonna look at all of the deposits that you're making and using that income, okay? You wanna also make sure a couple things. Number one is that you do get a CPA who knows NIL player situations financially, and they understand that. And the tax advantages, how to write off as much as you can, pay less on taxes. You also need to budget as a NIL student what you're gonna do with that money, right? Putting aside for taxes, depending on your tax bracket, how much money should you put aside? That's a part that you need to talk to a CPA on. How much do you need it for living expenses, spending each month? And then a savings piece, right? Saving for that down payment on a property or a rental property, or investing in even other things. Okay, now you need to remember to start getting credit as soon as possible, because mortgage options are gonna look at your credit, okay? That falls under you. So not being an authorized user on your parents' account, this can be a huge problem for you later on. So you wanna open up that credit card, preferably 2 credit cards, right? 2 secured credit cards. This is where you give the bank, let's say $300, and they give you a $300 credit card, right? Open up at least 2 of those and then use them consistently, but always keep the balance under 30% of your credit limit. So if it's a $300 credit limit, make sure your balance is always under $90 because the credit bureaus update at different times. And if you maxed out your credit card, it would actually hurt your score, right? Start that as soon as possible. As soon as you can get a credit card, get one, right? This is part of being ahead of the game as well as you can be for this. So let's say you're looking to buy a primary home, okay, that you're gonna live in. You can look at FHA as an option, okay? You can also look at conventional loans. They're gonna take into account the last 1 year or 2 years of your tax returns. This is the income that you're reporting on your tax returns after write-offs. This may work depending on how much money you're making, and it may not work. And we'll go over into some other options here in a second for that. So that's again why you wanna start that business as soon as possible with the DBA, the LLC, and then filing it on your tax returns as soon as you start making that money. Keep in mind with those FHA and conventional loans, you could have your parents co-sign on the loan with you. If your parents make enough money, they could go on the loan and maybe you don't even have to have any NIL money at that time to qualify. It would go off of your parents' income or a combination. You made a little bit of NIL money, your parents are gonna co-sign, that's gonna help you out. So that's an option. Now let's talk about creative mortgage options, all right? One of them is called a bank statement loan, okay? Where they're just gonna look at deposits in your bank account of that NIL money for the last 12 months and then take a percentage of that, and that's your income. This is a great option because it's better than going off of the tax returns because you may have too many write-offs, not enough income, and it also saves you reporting more income, paying more in taxes, okay? The minimum down payment for that, if you're buying a primary home is 10%. You could also look at doing a 1099 loan. So the university issues you a 1099 and they'll go off of that 1099 amount to qualify you, okay? And that's also gonna be a 10 to 20% down payment on a primary home. There's also asset-based, right? Let's say you didn't do any of these steps, but you got a huge amount of money from NIL money. We can use those assets and kind of calculate an income, and there's no income loans. So no income as in they're not even looking at the income. There's also no income loans when it comes to buying rental properties. This is huge. I was working with an athlete, a quarterback at a major Division I school, and we were going over how he could start to add rental properties, okay? And in there is the DSCR loan, which is how much would it rent for versus how much is your mortgage payment, and it just approves you off of that. So you may have gotten some recent big NIL money, you want to invest it, but you don't have enough of a history of showing it to report it as income or document it. This would be a great opportunity. It's also gonna help you because maybe your NIL money is only a little bit of income, but you saved all of it, and now you've got your 20% down payment on a rental property, okay? And you can use it in that DSCR loan. There's also no income loan options also related to that, but a DSCR loan is a no income option. All right, so to recap, 1, set up that DBA or an LLC. 2, start a bank account, deposit all of the monies into one bank account. 3, open up some credit, right? Under yourself, don't be an authorized user on your parents' account, okay? And then looking at your loan options, do you want to buy a primary home on where you're at your university or back home? Or do you want to buy some rental properties, right? And here's the truth. If you do this right with this money, you will have an amazing setup financially to be ahead of all of the kids your age and students, and even a lot of adults who are way older. By taking this money and taking advantage of it and investing in real estate now, you're gonna be super, super thankful looking back on it that you did this and you took advantage of it, all right? So a massive opportunity for you, your parents, realtors working with NIL students, everybody involved to be able to help those individuals blow up and have an absurd amount of wealth, right? At a very young age. And here's the thing, talk to a mortgage lender, such as myself, and come up with a game plan in advance. Like I said earlier, I dealt with this with an NIL student, and we're game planning for the future for him. Right now, maybe it's not something that can happen, but it definitely will happen in a year. And then how can you buy more rental properties after you buy your first one, right? So get with somebody, start mapping this out in advance, even before you're getting some of the money that you know you're gonna be getting because you're being ahead of the curve. Hope you found that information helpful. If you did, I would love to be your lender, and stick around for this next video. I think you're gonna like it.